The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the November 6th. Terrific Thursday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that each of you are off to a great start of your day. Let's make sure that you and I, that we do everything in our power to have an extraordinary Thursday. We should always remember that what's talked about, well, that's just simply a dream. What's envisioned, that becomes exciting. What's planned becomes possible. But what's scheduled, that becomes reality, folks. And I want to thank you for your reality of scheduling some time with me here this morning. I'll do everything I can to serve you. Of course, I'm grateful for your presence, and that means I'd love to hear from you. So pick up that phone, dial on in to 877-927-6648 internationally. The number is 727-445-1044. Of course, if you've got a question, somebody else has that same question, so don't call in for me. Don't call in for them. Call in. I'm sorry, don't call in for me. Don't call in for you. Of course we're going to call in for them because it's called a random act of kindness. And what better way to live your day than each day performing some type of random act of kindness? That is the way to live, folks. It is Terrific Thursday. I'm Steve Rhodes. This is TFNN, and welcome to the show. Right now, we got a flat market out here. Dow is up $2, S&P down 3, NASDAQ up 50 cents, Russell 2000 off $1, and the X100 off 3. New York Stock Exchange down 21 cents out, $21 out here. We just simply have a market that is moving sideways. We'll continue to move sideways. We'll kind of go up and down. There's going to be something for the bulls, something for the bears, maybe each and every day out there. There's not going to be anything for the bulls for a bit of time to come out here. And, yes, I had some technical difficulties during the last show. But let's hope that we're back up and running. And what that means is that I had a request inside our Tiger's Den. My apology to J&J. Let's get to it right away. J&J wanted me to take a look at ticker symbol COG out here. So let's go take a look at that. That is Cabot Oil and Gas, I believe, COG. So let's go take a look at it. He is looking. No, of course I did not ignore your request out there. But you tried doing a show when the bears are trying to disconnect your internet service. It makes it very, very difficult to do a show out here. Now let's go take a look at Cabot Oil and Gas, COG. J&J is looking for a long position inside this equity. So what do we know about this chart as we take a look at it? Number one, we can see it's been in a trend to the downside out here. Made a high back on February 5th. Looks like that was a 52-week high out here. That was at a price point of 41.78. It's made some lower highs. It's made some lower lows as well out here, but just draw a little trend line from the top out there. In order to Cabot Oil and Gas to truly break out to the upside, you want to see it get above that. Okay, what's it doing as we speak right now? We're looking for a long position. It's trading right into resistance of its market profile high level. Now, the importance as we take a look at those levels as you're watching us on Tiger TV, I hope you are. If you're listening on the radio, your mobile device at TFNN.mobi, we absolutely appreciate that. Visually, what you would see, and I'm going to describe to you what we're looking at here on the chart. If we take a look at one of our trading tools, our TAS market profiles, the resistance zone, ever since the time period here of May 2nd, 2014, so we've got, 5 months? 6 months out here, we have seen that those red horizontal lines have acted as resistance all the way since that time period out here, and it still is acting as resistance right now. So I say respect those TAS market profiles out there, J&J, that until you see price close above that, then you could start to say, okay, I'm seeing a change in trend. So that would be one thing to look at. The second thing that you would want to look at is Capital Oil and Gas and how it deals with the trading session from October 24th that has got 8.5 million shares. So, that in essence becomes a potential of a B point out there, and you'd like to see it get above that high, which is $32.79, and do it with more than 8.4 million shares. Yesterday on the way up, into that resistance zone, 5.9 million shares. It closed just slightly above that TAS market profile, but you really want to see it be able to take out this swing point here from October the 24th. So at this stage, if you're looking for a buy, you're in your bottom fishing in essence. In the case of Capital Oil and Gas, you're better off to buy it down at about the 28.14 level out here, the market profile low. And that's what I would be taking a look at. Let me put this on a little bit longer term chart for you. Let's see if there's anything else that sticks out at us as we take a look at Capital Oil and Gas, COG out here. Had a nice little key reversal week. That was the week ended October 13th out here. So that's pretty nice. That's bullish. That says that the lows ought to hold, those lows being 27.75 out there. From the weekly standpoint, when you take a look at its market profiles, you're below resistance, or support, I should say, out there. So old support becomes resistance out here. So that's somewhat questionable. So I'd have to say you'd want to be buying this more towards some type of retracement, or you'd like to really see this thing truly change its trend out there. So J&J, I hope that helps you, and my apology for not being able to get to it during the last show out there. I was looking for life rafts in order to be able to keep this thing going. All right, so that's what's going on with Capital Oil and Gas. So let's go take a look at some things here that are moving in the markets. It's not really going to be the markets, although they're pulling back a bit out here. Let's go take a look at some of the equities that are moving in the market. We'll give the markets an opportunity to kind of do its thing. Now, we do want to pay attention to gold, to the euro, to silver, to light sweet crude out there. Those are things that are over the course of the next 2 weeks, if there's really going to be an opportunity. It's not going to be in the general market out here. That's just going to lead to frustration. But where the opportunities are going to come, currency pairs and the metals, the hard currency pairs out there, and maybe even liquid currency pairs, meaning light sweet crude. Those are the things that likely have the biggest opportunities out there. And so I think that you really want to watch those things like a hawk out here. Nonetheless, we'll come back. We'll check in on those things. Let's look at some things that are moving to the downside here this morning. Let's start off with that by looking at Advanced Auto Parts. AAP is the ticker symbol, down 6% out with numbers here. Let's forget about the numbers. Let's look at the stock numbers, see what it's doing. So it gaps down this morning. You have volume off of the highs out here. Forms a little doji candle at its all. Well, I don't know if that was all-time. Yeah, it's all-time high, I believe. Let me see. Is that all-time high? Or is that the 52? All-time high. So inside of Advanced Auto Parts, forms a little doji out there. Now, dojis at resistance levels, they mean a whole lot more than any place else on a stock chart. Now you got volume off of the highs inside Advanced Auto Parts, and the volume so far, 1 million shares. Now, this had a breakout session, a little breakout party, that was on August the 14th. It broke out with 2.3 million shares. Now, it is not down there. It would look to me like Advanced Auto Parts probably wants to head down to that level. That level would, in essence, be somewhere between the top of that session, possibly. Top of that session is 125.32. The top of that session is 132.37. The low is 126.25 out there. So it looks to me like Advanced Auto Parts. Got to really see how it trades here over the course of the next couple of days. But it's not the way you like to see. You don't want to see a high made and then volume come off of that high. And that's, in essence, what Advanced Auto Parts has in store for it. Let me put this on a weekly time frame here. Let me see what this thing was doing on a weekly chart. Any kind of signals here that are out here in volume. I want to see where the volume, if Advanced Auto Parts already done 4.4 million shares here this week, you got a key reversal session going this week out here. Now, the good news is you're above the TAS profile, so that's pretty good. What's going to happen is if Advanced Auto Parts, AAP, starts pulling back with volume, moving into the April 7, 2014 level with more than 4 million shares out there, as it's coming into the 116 to 124 level, that could be trouble out here. Trouble inside this equity would really take you back into October 14, 2013. So we're not there, but it's something to keep an eye on. That's right around the $82 to $99 level. AAP is the ticker symbol. So that's the leader in the clubhouse on the way down this morning. We got Qualcomm. They were out with earnings after the bell last night, I believe, down 12% this morning. So let's go see what Qualcomm is doing. One of the equities inside of the NASDAQ out here. One of the top 10 inside of the NASDAQ, I believe. And so as we take a look at this, I want to switch back to the daily chart out here. Meredith, what's her name? That was for a question in the Tiger's Den. If we take a look at Qualcomm, now this thing is gapping down with some pretty big volume out here. Whitney, thank you there. So you've got Qualcomm down with volume, 24 million shares out here. Now this is not the first sign of weakness out here inside Qualcomm. It gave you that first signature of weakness with volume off of the highs back on July 24th out there. It gaps down with 37 million shares. Today you've done 24 million shares, so you've got even more of a sign of weakness. Now you got an A to B equals CD down pattern, most certainly. But let's first try to figure out where Qualcomm is headed to as it breaks swing points here with volume. That's kind of interesting. I'm going to switch over to the weekly chart. Need to do that. Need to switch back over to the weekly chart to take a look at Qualcomm and get a feel for where this puppy may be headed to. So the first thing that sticks out is going to be on a weekly chart. You always want to take a look at those swing points out there. So its most recent swing point would say Qualcomm should be headed back into the July 2013 area around $59.02 to $62, and you're at $68 right now. There's nothing else that really totally sticks out at me, like a high volume low or something like that hasn't been tested. Nothing really sticks out that way. So I'd have to say Qualcomm probably headed down to the July 8th area back in 2013. Let's see. You've got CF Industries now taking the lead out here. I don't know why it's taking the lead on my screen. Nonetheless, CF Industries, CF's the ticker symbol, down about $9 as we speak. So let's go take a look at CF Industries. We take a look at the daily chart on this. Come on, baby. And so this is gapped down this morning slightly, but it's trading right into a swing point out here that we'll see if it can hold this level. Because this did have a sign of strength out here, pretty decent sign of strength not too long ago. That was back on September 23rd, 2014. It moved up with 3.5 million shares and pulling back today 270,000 shares. Now, it's going into the October 15th swing point with a bit too much volume. Has not tested the lows. It ought to go down and test the 239.46 level. And that is ticker symbol CF. If it can break through that area with volume, then you've got an A to B equals CD to the downside. But not until it breaks through there, meaning closing below, not just testing the low, but closing below 239.46. Right now, Dow's off 23, S&P is off 6, Composite's down 8. I'm telling you, this market is going to frustrate so many over the course of the next week or so out there. Oh. Anyways, this is Steve Rhodes. This is TFNN. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is off 20 points right now. S&P is down 5. NASDAQ off 13. Key level probably for us to be watching inside of the NASDAQ out here. Let me put the 300-minute chart up on our screen out here. Let me pull this over. We looked at it yesterday, and one of the things that we noticed, really a couple different patterns that were setting up here yesterday, and the NASDAQ really kind of played out to those patterns. Those patterns, if you watch this on Tiger TV, number one, we had price moving higher with less relative strength out there. Formed a nice big old, this is a 300-minute chart, so we're talking about 5 hours, has more meaning certainly than the 30-minute chart out there. And if we take a look at it, formed a nice little bearish engulfing, bear sash type candle. That was here at the time period that ended at 2 p.m. yesterday. A little bit of a bounce over the course of the next, through the close. Because that's really the way that my system works here, is it runs those 5-hour charts out here, and when the market closes, in this case here, 5:15, inside of the NQ, then starts the next session when it opens up, and then I get the next 5 hours out there. That's different. It's the way that most traditional charting packages will work out there, but not all. Now, what we do have to take a look at here that doesn't really matter with regard to that is the fact that if we look at this, market profile that began out here at 5:15 on October 31st out here. We're November 6th. I would have to say that becomes the real level of support out here. And if the NASDAQ could be just trading inside a trading range out here, just like the general market should do. That trading range could be from the low of 41.27 up to that high that came in essence, yesterday out here, 41.81. Now, that's a pretty good trading range. You know, if you can catch the top and then catch the bottom out here. You start to break below the bottom of that market profile. I'm not so interested in the one that formed during this last 5 hours. I'm more interested in, you can see if you can see on Tiger TV these little green dashed lines out here, and soon you're going to be able to see this really clear. I know inside the den you can see that. You start to break below that, below a support level. What we can say is that coming off of the lows here in October 16, that we haven't seen price close below a market profile low since then. That really then tells us, okay, now we could be seeing a deeper retracement going into next, not this Friday and the next Friday, but the Friday after. Yeah, it's two weeks. 2 weeks of potentially just kind of, chomping around out here. So very, very, very possible. So that's the first level of real support. At this stage here, the trend has not changed. So one would want to take a look at possibly taking, you'd have to go look at intraday charts. You might want to be taking, and knowing that we could be range bound out here. Yeah, my suggestion is you'd actually take a look, and if you're going to trade this, you'd want to take a look at maybe closing out shorts around that level, maybe take a look at long positions intraday, because I almost think you've got to go down to some really short intraday time frames out here to be playing this kind of chop that may be inside of the markets and kind of going along with what I'm seeing at some other tools that I use out here. So that's what we take a look at inside the inside the NQ. If we take a look at the ES mini out here, the S&P futures, just to give you some kind of guidance as well. Now, it's not as identifiable inside of the 300-minute chart on the ES. What we do have on the ES and the 300-minute chart is, by the way, we also had that seventh wave up at that price relative strength divergent pattern out there. In the case of the ES on the 300-minute chart out here, we've got a fifth wave up, and we have right now, as we're speaking on this 5-hour time frame, you have the same kind of a pattern that could be setting up here that we looked at inside of the NQ. Now, this time frame doesn't close out till 2 p.m., a 5-hour chart out here. But if we did have higher high, we're in the process of making maybe a bearish engulfing, maybe a dark cloud cover, maybe nothing by 2 o'clock. I don't know. What I would say here is there's a long way to go to get down to support. So if the NASDAQ cracks that level, what you would probably be looking at is the S&P trying to move down to about the 1977-ish type range out here. Now, 2006, that's going to be some pretty decent support. So that's the first level that it has to crack. Now, that's on a 300-minute chart out here. I think that 2006 level, so that's the support area on the 300-minute chart on this new profile for the 5-hour time frame. I think the 30-minute chart, as I recall this morning as I was looking at things here, also showed 2006. Wasn't on this chart. Where'd you go? Where'd you go, you little booger? It might have been another. Where was I looking at that 2006? Oh, come on. Where was it? And it's not on this chart. Son of a gun. It must be on another tab that I have. I won't waste your time looking for it. 2006 is going to be an important level of support for the ES Mini. Right now, we got the Dow off 9, S&P down 5, NASDAQ off 9. It's down here. Yes, they press Mini sideways. Steve Rhodes again. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page. Of TFNN.com.
At some of the commodities out here. So gas, I see somebody in the den just mentioned UNG out here. Now, natural gas is off of the bottom for sure. And if we take a look at the current contract out here, let's put up the December contract. We know that what natural gas did yesterday formed a little shooting star candle at a resistance level. Now, the resistance level, let me just kind of squeeze this a little bit, technical term out here, this 4.255 level. Inside of natural gas is resistance. It's resistance of a couple of different swing points out here. So price yesterday got up into that level, had some good volume behind it, formed a little reversal signal out here, a shooting star type candle. And today it's trading right now as we speak right now, kind of flat, a little bit back, just a tad out here. So you don't totally have follow through to the downside from that shooting star, but you don't have it taking out the highs as well. So What we want to do is we want to watch natural gas for some type of retracement. Now, on an intraday basis, it might just be an A to B equals CD down pattern out here. From a retracement level, what you'd say is you'd be looking for probably the 0.382 retracement. Now, I don't know what the weather pattern's supposed to be like up north this week out the East Coast. Last week it was pretty darn cold out here. But, if natural gas gets down to the 405 area, 388 would really be a gift. That's your 0.618 retracement level. And pulling back with light volume. Then this really sets up from a nice seasonal standpoint out here. If I put it on a shorter-term time frame, the 30-minute chart, just to see if there's been any kind of A to B equals CD pattern or anything that formed out here, I see one. Let's go see if it actually completed it as it made this low out here. Now, this is a 30-minute chart that we're looking at. We're going back to yesterday's high as our A point, the low at between 9:30 and 10 on the 5th. Today's 6th, yeah, yesterday's low out there. And then this little retracement up here that took place about 9:30 to 10 o'clock in the evening. So, no, it's got a... it's trying to take out a B point of an A to B equals CD to the downside, and it's got volume in it, so it should be able to do that. That B point, again, being the trading session between 9:30 and 10 yesterday, that had volume, number of contracts was 10,000, about 11,000 contracts. And so far in this 30-minute session out here, you've done... Where'd the volume go? Come on. Oh, 13,000. So you got more volume there. You're pushing into that B point. That says that, okay, we should get to see that retracement down to the 405 level. Now, you'd want to watch volume, see if it's lightening up as it gets down to that area, or whether it's picking up. Because if it picks up, then you got the 388 area. So, Terry said he missed that last move in UNG. Contract roll and NG may not be a good time to buy. I think UNG is a good time to buy on a completed pattern here to the downside. You're talking about from a seasonal standpoint, and what I would share with you this. When I take a look at the Commitment of Traders Data, the CFTC, you can Google CFTC COT, and you can get all of the historical files, and you can start to do all your own analytics out there. What I can tell you is that as a group, the large money out there, large commercial traders, they have taken their largest net long position inside natural gas since 2011. We're 2014. So, there's a large pool of money out there, large pool of money that is saying, they're going long naturally. That same pool of money, by the way, is taking the same type of position on silver, the same type of position on gold, the same type of short position in the currency market out here inside of the dollar. And and you've heard me say this. You may be getting tired of me saying this, but I got to say it, right? So it's going to be interesting to see how that all comes together. Now, the first shot across the bow today of the storyteller being Mario Draghi, that may have, because the ECB had, they're based, the Fed's done till December, aren't they? Yeah. And you've got the ECB, he's done telling his story. He's done with his Fibonacci expansion out here, I think. We see here's the euro. I've got the euro futures up here. It makes a 1 to 1.272 A to B equals CD. Makes 1.272 of its expansions, its last set of expansions out here. And today, if it can close back above the hammer candle low from November the 3rd at 1.2494, you'll have just a completed pattern and a hammer candle acting the way that it should. So we'll just simply see if, in fact, that happens. Now, why is that important? Well, number one, if Mario Draghi really had control to do total QE, the kind that Uncle Ben Bernanke was able to do out here, the euro should have blown through this pattern. And not that it can't, it still can. But it should have blown through this pattern. We shouldn't see the euro making lower lows with less relative weakness out there. That's just telling us a story of BS. It's all before Steve, before I was able to teach this pattern to you out here. So now we're just waiting for a little bit more confirmation. Why is that important? That's important because you got the euro representing 57.6% of the U.S. dollar index out here. So if we're looking for clues for all of these things to be put together, which I am, And I recognize I'm in that that lonely camp out here is one of the few that are. But you know what? So I don't mind that. I just read a good book or something along those lines until the market gets ready to prove that point to me. But what I am saying is that's what the market's really getting ready to do. Now, gold here this morning with the U.S. dollar index being up, gold's kind of flat. In fact, it is flat. It's up 20 cents right now. But it's off of its lows. Now, in gold's case here, no bullish candle yet. Certainly no. It's going to take quite a bit in order to get a bullish candle today. You need to get up above yesterday's open, which is 1168.40. That would go a long way to saying that you see some kind of reversal. But what was interesting earlier, I think it was during the first show, we said the mining stocks were not buying into this. If the euro is going to go ahead and get weaker against the U.S. dollar, which in essence it should, right? And we know that and therefore the U.S. dollar index gets stronger. And we know the directional correlation between the GDX, the HUI, that we know that correlation out there. Then mining stocks ought to be running for the hills out here. And that's not what we saw earlier this morning. So we got divergence. In here, I got my screen back up. And as we take a look at this, you got 40-some-odd equities out here. They're all green. Now, not necessarily with some big volume or anything behind the moves out here. Actually, they're all green. You got Comico. CCJ. CCJ is more of a copper play, is it not? Than an actual metal, than an actual gold or silver play out here. So they're all green. They're all green out here, and they really shouldn't be, right? I mean, if the U.S. dollar index, if you're one that believes that the euro is going to get just croaked, and that's going down to par out here, then all these stocks ought to continue to bleed like heck out here. And it's not really what we're seeing. As an entire group, they're all slightly positive out here. And I think that's a really important message. Now, what we want is some type of confirmation, because it's going to be all about that currency pair. It is going to be all about the U.S. dollar index. But what I can tell you as a group is that the smart money is saying, no way, Jose. In no way, Steve-O, that we're going to see something, and you're going to be like scratching your head. Uranium. Thank you. I appreciate that. Knew wasn't gold and silver out there. That's for Comico, CCJ out there. So really, they're all green across the board out here, with gold just being flat, and with the fear of what the euro is going to do out there. And that's why, what's kind of cool is that when it comes back to taking a look at a stock chart historically, none of us will remember that the ECB came out this morning, and said what. And I don't know what. I don't have the news behind it to know what Mario said, but I'm sure he said he was going to save the world. He was going to print money until the cows come home and stuff like that. And then the euro, sold off. And, so the session's not over, so we just simply have to wait. Nothing like just waiting for some confirmation. Because if this is the case, and oil's going to move higher, and gold's going to move higher, and silver, as well as the equities, it's not going to, move higher for a day or two. It's going to be a pretty decent bottom that is going to be put in place out there. Okay, enough. Let me get off that horse. Let's go take a look at some other things inside of the marketplace out here. Let's go look at... Let's go look at the DAX. Kind of interesting because it was up about a little over 1% here this morning. The FTSE was up just slightly. It's now flat out here. And let me put this back to a daily time frame. Let's go see what the DAX has actually done out here. So the DAX at this stage is starting to look a little bit like a potential shooting star out here. Let's see what kind of retracement the DAX is in. So the DAX is weaker than the U.S. market, that's for sure. Weaker than the composite, weaker than the New York Stock Exchange. I say that because it's swing point high from September 19th, right? Our day, September 19th. The DAX, September 19th. Now the DAX is all-time highs, not September 19th, but you can see the correlation of in essence, the one world market. So U.S. is much stronger than the DAX is here. It's made a little bit above a 0.618. It's almost made the 0.786 retracement out here. So it's at a range here where it too, if you really, the essence of price is really the body of the candle. The extreme emotions become those wicks, those lower and upper shadows out there. So really the body of the candle is something that you want to really keep your eye on and stay focused with, because that truly is the essence of price. That's why those bullish and bearish engulfing candles are really so important, because the wicks become somewhat irrelevant. It's nothing more than extreme emotion. The real thing about what traders are doing is that body of that candle out there. Let's take a look at some things. We looked at a couple of equities that were moving lower, like Advanced Auto Parts and a couple others out here. Let's look at some stocks moving to the upside. Let's go take a look at Tesla. Teflon Don Tesla, that's up about 6%. Let's go see what that is trading into. It's got some pretty decent volume behind this morning's move. So what do you know about Tesla? If we pull this back, looks like it was a gift from Gertley out here, HM. Looks like it is the second Gertley buy pattern that is formed inside this equity ever since the real low, really since it began trading. So I see two Gertley buy. Maybe there's a third one. The first one, Gertley buy pattern took place in November 2013. That was a low. The second Gertley buy pattern that took place back here in May of 2014, and it looks like we've just had the third Gertley buy pattern. Because if you take a look at the A to B equals CD to the downside. Inside of Tesla, your A point was up at the high September 4th. Your B point really, if we're going to do this right, is going to be that we have to do it right, don't we? I was back here at October 3rd. It doesn't look like it's out fully completed. That A to B equals CD to the downside out here. So maybe there's a little bit more work for Tesla to the downside, right around the 209.77 area out here. But it's really just consolidating, been moving sideways. It's got some decent volume today, 8.4 million shares. But what Tesla's got to do, it's got this, what would make me say it really needs to complete that 1-to-1 is the resistance area. Let me turn off the TAS profiles out here. Give me a moment to do that. Excuse me. Because you can clearly see the resistance that it's got to clear. So Tesla needs to clear the resistance of this gap down from October the 10th. And that's going to give you two real different levels of resistance. 245.89, your 246.10 as we speak, and 254.40. Closing those gaps would say, okay, work to the downside is done out here. And as well as it would also depend on how you're moving into the October 9th level. If you're moving in there with more than 7 million shares and you're 8.5 million shares, say you're not up there, that would say, okay, the work to the downside is done inside of Tesla. Had a request here to go take a look at Henry Schein, so let's go do that. The HSIC is the ticker symbol, so we'll do that for our tiger in the den out here. Boy, that is taken up to the upside. Most certainly, it's trading out at 127. It's got some decent volume behind its move out here, 343,000 shares as we speak right now. Let's pull this back and take a look at it. This thing here has been consolidating, and it has broken above the consolidation with conviction. Its consolidation pattern out here, if we take a look at it, between this, it's really this kind of this blue area as we speak. That's your consolidation. That becomes your measured move. The bottom of the consolidation inside of this takes you down into the low of about 109. The top of the consolidation is out at about 121. So we're going to call that 12-point consolidation. If we add 12 points to 121, that takes us to 133. It looks to me like Henry Schein should be headed up to the 133. Now, when you break a consolidation move, your measured move is equal to or greater than the consolidation. And that is where HSIC should be moving to. This is Steve Rhodes. It's TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 26 points right now. S&P is flat. Composites back 4. Russell's down about $1.70 out here. If we take a look at, the technology sector's back 17 cents. XLF is flat, down a penny. No big deal out there. Let's take a look at a couple of these stocks here that are moving in kind of a flattish type market out here. We took a look at Tesla. Let's go take a look at Tableau software, up 11%, up $8 and change right now. We'll take a look at it if, in fact, my my system here participates with me. If not, we might have to go back and talk about food fight stories or other things that could take you down to the principal's office in elementary school, which I can't say I'm proud of it, but I did have a few. Did have my parents were called down to the principal's office to pick me up a few times out there in life. So in any event, let's take a look. Let's not digress here. I don't want you to change your opinion about me. But if we take a look at the Tableau software, DATA is a ticker symbol. Gapped up this morning, pretty decent volume behind the move. 2.1 million shares out here. Trading into an area where this thing started to run into some trouble, which is all the way back in the early part of 2014, which is the March 21st time frame. And there it started kind of falling apart. You saw volume pick up to the downside out here. There were 5 million shares. It did make a high volume low, I believe. It's a high volume-ish type of low out there. That was actually a little bit of a sign of strength back here on May the 6th. It's made it has changed its trend. It's made made a couple of A to B equals CD patterns here to the upside. The last last swing point was September 12th, 3.3 million shares, and it got over that with light volume. Up until today. So it really today confirmed the A to B equals CD to the upside inside of this equity. Let's see where that actually takes price out here. Your A point is going to be this low from around August 12th. Your B point September 12th. 30 days later, a month later, October 13th is your C point. Your 1 to 1.272 is what it hit. It really should go higher. So I'd say this has got about 91.60 to 95.37 as its price projection on its list. That is Tableau software, DATA is the ticker symbol. As we take a look at other things percentage-wise on the move out here, maybe just to finish off the show, let's take a look at Stamps.com. I don't recall ever looking at ticker symbol STMP, but this thing is doing well out here. The revenues are $37.8 million versus 31, so nice little growth there, and bottom line growth as well, 9.4 versus 8.76. Now, Stamps.com has got a high volume untested low out here, so if this thing ever takes a licking and keeps on ticking, that'll go ahead and move it down to the May 1st level, which is down at about 27.18. In the meantime, it's got some decent volume, only decent volume to the upside. You know, it's not exactly the most liquid of stocks. A good reason for us to not take a look at Stamps, and maybe a good reason for you not to take a look at Stamps.com as well. Average volume is like about 80,000 shares. You know, never like on a $30, $40 stock. Not a ton of interest out there. Well, folks, it is Terrific Thursday. That means we've got a great lineup for you. Stay tuned because our man Basil Chapman is up next. So looks like a nice day out there to go wax up the surfboard. The winds have been pretty heavy, so maybe some good surfing out there. So stay tuned for Basil. And, of course, after Basil's show, we've got Larry Pesavento doing the Futures Hour. After Larry, our man Daryl Martin, and then, of course, David White. And then after that, the Tom O'Brien Show and Andy Heck from 5 to 6. So have a great Thursday, folks. I look forward to seeing you bright and early tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.